Hi everyone, welcome back to Berich. Anand is traveling, so it's just me alone in the studio with you, Sadhu, and Arun today. I know you do miss Anand, and without Anand around, you feel like just skipping the video. But don't, because I have something interesting for you. We have spoken about Crocs, we have spoken about Nike. I thought, why not do the Holy Trinity and come to Essex? The reason why I decided to do Essex today was the news broke today that the Puma shares were up 14%. That's remarkable considering where they've fallen from. They've fallen from, in the last year or so, they've fallen almost from 100 to around a paltry 18. And most of it is thanks to the fact that they've not been able to regalvanize the brand and able to get rid of their old inventory and get somewhere. They seem to be floundering. So the news broke that there's a Chinese company trying to bid for it and maybe take it over. Then I read Li Ling was also another Chinese brand, famous brand, is also trying to gun for it. And then the Japanese Asics is also gunning for Puma. And I thought, whoa, we haven't looked at Asics as a company, Asics. And so I thought today we'll talk about Asics. And once in a while, a company is usually written off for past its prime, and then it pulls off something remarkable. And Asics, this Japanese sports giant, I think, is just one of them. It has done exactly that. So, from being a legacy player stuck in the shadows of Adidas and Nike, reclaiming this top spot of being an engineer of the running shoe world. At the time there was nothing but Asics. All runners, you can would attest to Asics as a shoe they would be running with. No other shoe was good enough. The Nikes and the Adidas were never, because they were so well engineered. Japanese engineering, of course. So, but then it fell out of favor. They lost their way, and then Nike and Adidas came in and they swallowed that space. And but now they've come back, is what I feel. And the $1 million question is it a company we should be looking at? Is it still worth buying at the price it is today? But before we get into those numbers, let's rewind for a minute and see what is this Asics company. It has a very fascinating origin story, quite legendary. The company began right after World War II, like most big Japanese conglomerates. Of course, there are ones which are much older. In 1949, when Hichachiro Onitsuka started making basketball shoes in Kobe, Japan. And of course, Kobe is famous, the name, the beef, and the basketball player, and of course, Kobe, Japan. So his goal was simple but profound. He wanted to help young athletes build their bodies and mind through sports. The brand itself, Asics, comes from this Latin phrase known as anima sana il corpore sano. That means a sound mind in a sound body. I have Sadhu behind me going, wow, I didn't know that. He thought Asics was like basics, but they dropped the B and just became Asics. A lot of people did, actually. So the philosophy of the company is guided through this, ever since the beginning. Inception was sound mind and sound body. Sounds very Japanese and very Zen, doesn't it? So in the 1960s and 70s, the shoe became the gold standard, like I said, for all serious marathon runners like the legends like Derek Clayton, Frank Shorter ran with them. And in the 1980s, the gel technology was a breakthrough for them. This line made Asics synonymous with performance innovation. It's still spoken about. The Asics gel shoes, even my sister-in-law and even Shashwat would talk highly of these shoes. But Shashwat's become a Nike fan nowadays, so Asics has gone to the wayward. But as Nike and Adidas globalized faster, Asics fell behind because they're very conservative, too domestic, slow to change. Sounds familiar? Refrain from any Japanese company. Very conservative, very domestic, and slow to change. But the decline was not for a long time. They did come out of that, and they've become a major global giant now. And they have operations all across Asia. India is famous for this. Rahul Dravid, I think, is still a brand ambassador, or was a brand ambassador for them when they entered India. And their shoes were initially priced quite high, and now they've become more reasonable, because I think some of the manufacturing has also come into India. It's not completely imported anymore. So this turnaround story is remarkable. So let's start with the fundamentals. It was a major reform a few years ago called C Project. The goal to shift from chasing volumes to chasing profitability, and it seems to have worked for them. Revenues have been growing quite solidly, and not because of deep discounts like what Nike and everyone else did, but because stronger brand pull and better product mix. The performance running shoes, which they've been famous for, and the sports style segment is where they've been making most of their gains. The gross margins have now crossed 50%, which is a big milestone for a brand that once was struggling in the low 40s. So from the low 40s, they have managed to come and cross 50 percentage in gross margin. That's pretty remarkable. And the question remains, how do they do this? They did this by moving more to sales to direct to consumers and e-commerce, both with higher margin channels and, of course, the Japanese style of tightening supply chain discipline has really helped them too. This moving from direct to consumer has really helped, and e-commerce. Nike tried to do this, but Nike did not succeed. On the other hand, Asics has succeeded to do this very successfully. Operating profits are a record high, and the return on equity has also climbed to high teens to the low 20s. So from the teens, it's gone into the 20s. So operating profits are also up. So this is a great example of a company reinventing itself when it is in a crisis, and it's managed to succeed. So now the question comes into picture. Everything is great, we know, but what about valuations and capital efficiency? Return on capital, and is it in value right now? And that is a good question to be asking. But the success has a price, literally does. Asics now trading around 30 to 35 times forward earnings. And that is a big jump from a historical average. It is a big jump if you study it. And I do recommend that you study it. You should never be investing based on a video where you just hear me faffing a little bit. You should really get inspired by my faff and jump into it and read a lot more. Sadhu does agree, though Sadhu doesn't read. Why? Only Sadhu knows. So to put it much closer to Nike, and it is closer to the other ones like Puma or Mizuno. And so the market clearly believes the turnaround is real. The problem is also pricing imperfection. The stock's PEG ratio, price to earnings relative to growth, it's a very famous one which we value investors like digging into, of course, shows that investors are already assuming the level of performance will continue for several years, and that is not a cheap thing to be factoring in. Because as a value investor, if you're looking at an entry point, if investors are already pushing the price up, saying, it's going to be growing like this for eternity, then we do have a problem. In case in point of Nvidia and any of the AI stocks. So this applies to our regular old shoes also. However, the balance sheet is very strong, I would say. The net cash position, I see solid free cash flow, I see, and disciplined capital allocation also. So instead of piling on to debt, the manager has been using its cash to improve inventory and inventory control, and also invest in digital platforms, which I would say is a very good thing for the management to do, and that is very inspiring for me to invest in a company. I would like to own a business which is very low in debt, and they take their cash and they use it for forward business growth, and they seem to be doing that really well. So why is this winning? So what is really driving this comeback is what we need to really look at. And if you see this sub-brand which they've created, they call the Metaspeed effect. For years, Nike has been the one with Vaporfly dominating the super shoe era with this carbon-plated high-speed boost tech and other things. But Asics has lately come into the game. But with this Metaspeed and Novablast lines which they have got, they've not only caught up, but they're competing head-to-head. So in terms of performance shoes, okay, I'm not an expert in this, so it's not in my wheelhouse of competence. But from what I've read and garnered, people who have been wearing Vaporfly shoes, athletes and pro sports people, they say this is Asics's Metaspeed and Novablast are running neck to neck and even caught up, and it's literally now what you see elite marathoners are back to wearing Asics shoes, and that's brand credibility that money cannot buy. If you see athletes, world-class athletes wearing your product and they're winning because of your product and they believe in your product, hey, it's good. It's good as gold, because it definitely builds a moat, a sports style moat which you cannot buy with cash. And this is the sleeper hit which they've had. The lifestyle dad shoes are also back in trend. The vintage models like the gel shoe which I was talking about, those gel shoes are back in vogue. Dads like me and Sadhu behind the camera are finding them affordable, and they have also become a cult favorite, just like the Adidas Samba, which Rishi Sunak poured water on. Another old man poured water on. But these have become cult favorites again across Asia and Europe, and we have high disposable income, especially in like places like China and in India, where the K-shaped recovery has been helping someone like Asics. So the beauty of the brand doesn't rely just on heavy R&D. It has also managed to capture nostalgia and leverage it very well with high margin sales. Because the older shoes doesn't have so much technology baked into it. It's pretty much looking back at a bygone era. So it's much lower in cost to make, and you can have a much fatter margin because people like old dads like me who have made a little dosh are willing to spend a little more to go back to nostalgia times when we were kids. So this geographic expansion has helped. It's no longer a Japanese-centric story. The growth has been stronger in Greater China, Southeast Asia, I see, and India. And e-commerce has been growing them, owing to their customer data directly. No middleman and no retail squeeze is happening, which is all great news. But this does have a bit of risk and reality check we should do, and which should help us keep our feet on the ground, because Vinod tends to build this up very nicely and you're like ready to go invest. Shouldn't. The stock has rallied hard. Looking at this, I would say it's sharply over the last 18 to 24 months, and these levels, any slowdown, which I do expect in consumer demand in the US and Europe, could trigger a sharp correction. And this correction will come because the way the American economy is placed right now, and even the European economy, I would say consumer demand will come down because of what's happening with inflation across the globe, especially in the developed world. So this could open up a correction. And then, of course, there is competition. The real threat today isn't Nike, it's Hoka, which Nike has also been decimated by, which is owned by Deckers, and that On Running shoe, which Roger Federer has invested into. That is another great brand. And these challenging brands are really targeting the same premium where these guys are taken. Tech-driven, affluent running. That is a very crowded area right now, and Asics is courting the same crowd. But it does have some things going for it, like the yen. So it does may benefit massively from this weakening yen because it's earning in dollars and euros. And if the Bank of Japan, decides to let the yen fall further, this is going to give it more headwind or tailwind, giving it more cash in the bank. So this is something we need to pay attention to. So one, like I said, the competition. Two is inflation, which is going to affect them. And three, the yen, because they're earning in dollars and euros, that comes back as yen at home. So there is a lot of sectoral and macro picture, broadly speaking, which you should look at, being a global foot market. So looking at that, I would say these are the main things that you should keep in mind. Am I missing anything else? So in the short term, we can look at this company converting this post-Olympic buzz into actual sales. So quarterly earning guidance revisions have been critical, and they've been not disappointing there. Even though they've been upgraded, they've been managed to hit these lofty goals that have been set. The question remains, will this digital ecosystem they've built and this loyalty program they've built called One Asics, can they be the next leg of growth is what the big question. And if the yen also starts appreciating, that also could hurt them. So to wrap this all up, Sadhu saying, they've spoken enough faff, please stop. People can do the research from here on, which is fair enough, I say, Sadhu, because he wants to get home and he's had enough of me alone in the studio. So wrap this up. Asics is a great company, like I said, complete turnaround. Fundamentals are very strong. Management is very disciplined, as always with any Japanese company. But the brand heat is real. Okay, so there is a lot of momentum here. So at 30 plus times earnings, I wouldn't say it is a buy right now. I would say it's a smart move if you have it, to hold it, to accumulate on the dips, especially if the macro volatility kicks in. Like I said, with inflation and the yen, you have an opportunity. I would definitely be putting it on my watch list and be holding it and watching it. If I do see an opportunity, if a dip happens, I would definitely look at Asics. So what do you think? What do you think about this brand? Have you worn this brand? Do you believe in this brand? I would like to know. I'm curious. Let me know. And I would love to read the comments about Asics, and I'll definitely come back and offer my 2 cents. And I am sorry that I couldn't get Anand in to, talk about some macroeconomic news or about AI or Fed and all those other great things about gold prices, even oil. JP Morgan and Stanley are saying, Goldman Sachs also are saying that what you call oil might go down to $30 a barrel by 2027, and that really is not good news if you think about it. And if Anand was here, he'll explain it more eloquently on why that is than me. But if I don't manage to catch him, then maybe next week sometime I can have him talk about that and explain why a cheap oil is not good news as we investors think it is. Anyway, thanks for joining me on Berich today. I hope you have a wonderful day and you have a wonderful evening. And I will see you again. Me and Sadhu. Arun kind of walked off. I guess he was bored, but me and Sadhu are here. We'll catch you again tomorrow. Thank you.